Hello, my name is Barry Clark and welcome to the Mortgage and Property Podcast. I'm joined today by special guest speakers Ilsen and Aidan Lesslie from Magnet Capital. These guys are specialists in all things development finance. So hi guys, how you doing? You okay?
Morning, thank you for having us.
Yeah, all good. Yeah, all good, thank you.
You're good. So just quickly introduce yourself and say what it is you do. And obviously you guys from Magnet Capital. Just tell us about who you are and what it is you do, please.
Yeah, so we are a specialist lender of development finance. So I'm chief executive, day to day running of the business, dealing with clients, being on site, going up and down ladders, all of that, and helping the business grow.
Yeah, and I'm Aidan, and I'm the sales executive here. I am very much doing similar work to Ashley, except just on the lower scale, meeting brokers on a daily basis, much like yourself, Barry, and everyone at the Mortgage Monster team. Just getting out and about and meeting as many clients as possible, really.
Cool. All right, brilliant. So today we just want to touch over a few bits and pieces and really just see how you can help maybe some of our clients kind of move more into these spheres, maybe move more into development finance, show us examples in which ways they can be helped and so on. First, let's just start off with a real nice, easy question. Tell us, what is development finance?
Yeah, so development finance is, providing the liquidity to help a project come together. So whether it's a refurb style flip and turn, or a new build, or a barn conversion, we allow an amount of funding from the borrower to get from A to B. And I think, when people get into property development, they want to, build a brand or build nice new homes or good commercial spaces, but they don't go into property development to get really stuck into the development finance side of things. So I think it's very much our role to make it, an easy process, and I suppose step in where banks have seem to be failing quite a bit at the moment.
Okay, so where you guys will kind of differ to banks is the fact that, from what we're seeing from our commercial aspect, banks tend to kind of maybe lend on maybe a much bigger scale, very kind of low loan to values, very, very low risk. So therefore, what we find with a lot of our clients is the fact that, unless they're looking to build ridiculous amounts of size of kind of developments and literally put in all of the money practically themselves, then, only at that point will banks generally be interested. Whereas, guys like yourselves really help everyone else out.
Yeah, absolutely. We have a saying in our industry that a bank will, is an institution that will lend you money on the basis you can prove to them that you don't need it. And obviously,
that's true.
Yeah, and it is. And that's they've ever since the crash in 2008, that's kind of the way they've gone. Unfortunately, they've kind of shell shocked themselves into not being able to lend money to the right people. Yeah. Whereas we're funding small, medium-sized businesses, anyway up from say a man in a van who's got a plot for one house up to say 12 units with say a slightly more sophisticated developer, and then everything in between. As you said, we're performing a function that banks are just no longer capable of doing, because I think they got a little bit suckered into that kind of computer says yes or computer says no way of doing things, which may work with other types of lending, but when it comes to development finance and looking at the nuances of property development, every project's different. It's maybe there's an ecological issue on site, or maybe there's delay in getting building supplies onto site, or what have you. And it takes a lender to be, apply human decisions to these sorts of things, and not just computer says yes, computer says no. Yeah.
Okay. So let's look at, say, for example, some example. So let's look at, say, for example, something at the lower end scale, because we do hear, property development has been really kind of glamorized, I suppose, by kind of some TV shows where you buy stuff at auction and sell it back on again. Your home's under the hammer and all those sorts of different shows. And we do hear quite a lot of people, especially younger people, want to maybe take up as a career, look as kind of time goes on. So give me just kind of a very rough, so for an entry level point of view, we'll look at some bigger projects later on. From an entry level point of view, in order for you to be able to lend on finance, what's got to happen? So have you got, first of all, if someone's building a new house, have you got to own the land? Have you got to kind of, do you help with money towards kind of buying the property? So talk me through what it is, a minimum entry level. And I know that all deals are very, very different. You need to take all deals as it comes. But in a general sense, have you got to kind of own the land first and you've got to own outright before you have development finance, or can you assist in kind of land purchase? Talk me through what it is that you guys can basically do.
Yeah, typically speaking, we have there's multiple scenarios in that case. So basically, you could have a client that's come to us who already they own land that's maybe a piece of land that's been in the family for several generations, or alternatively the other end of the spectrum where they've seen something at auction and they need to move quickly. And where we come in is that we can help fund a day one amount to help them purchase the land, or say refinance an existing debt on the site. So they do have options. So that's basically, say stage one before the actual building part of the loan comes into play. So, we had one recently where the client was buying something at auction, and obviously there's a time scale that we need to work to.
Really quickly, you work within 28 days, sort of thing.
Exactly.
So 10% generally.
Exactly. And yeah, so that, they're going to need to get a decision from a lender very quickly, and a decision that they can feel comfortable with a lender that's going to, actually deliver as well. So, I think, when you come into these deals, it's important to know that you've got a good amount of backing. From us as a lender, we do like to see what we call hurt money or skin in the game coming in. So that's
they'll bring some of their own money because there's a risk involved. So you need to make sure that they're partially involved in order to make sure that they can see the project way through.
Exactly, and that's just from us. We know that the clients, we're going to have the same interest at that point. It's not something that if it goes wrong, they can walk away from. And so they put their money on the table. I recently saw a post on social media where there was a lady who was purporting to, structure. I can tell you the 5 secrets to structuring a deal without putting any money in, and it's just it's nonsense.
Of course you can.
Exactly. And if you exactly. And if you're doing a deal like that, somehow the chances are you're not going to get much out of it. No. There's going to be equity going in that's going to take most of the profit. And you're not going to see
the risk involved from lender point of view is colossal.
Yes.
Because it's absolutely no money from the clients. All the risk is on the lender. So lender, potentially you might be able to get it, but the rates could be somewhere near pretty horrific, which is going to, like you say, erode any profit you may have made anyway, potentially.
Exactly, and you're putting your name to a project where, like we just said, you're not going to see the returns out of it. So you do need startup capital, okay, and you can still start on a small scale, kind of homes under the hammer style flip, but we expect to see something come to the client brings something to the table.
What sort of amounts would you envision them having? Is it as high as kind of 40-50%? Can you do stuff which is a bit lower? Talk me through what it is that is a very, very best case scenario. I know it's not all case, so I know it's not.
Don't hold me to it. I think we usually like to see clients put down, say, 40-50% on day one.
Okay.
Of say a plot of land or a purchase of an existing property, and then we'll come in and do the rest. We'll help them buy it. We'll fund the full cost of works as well.
Amazing.
And so for a new build project, that can obviously be up to half, if not more, than the total cost.
Yeah.
And then we lend, different to a mortgage where you're looking at, you've got bricks and mortar, and therefore your value is X. We've got, a day one value of a hole in the ground, which is X, and then a hope value of Y, of what it's going to be worth in, say, 12, 15 months time. And unfortunately, we don't have a crystal ball, so we can, just estimate what that's going to be, and then lend them a percentage of that amount, so which we call the gross development value.
Okay. And that's typically kind of what is the GDV amount you'd normally go up to, or a lender such as yourself might go up to potentially?
So typically in this market, you'd see amounts of around 60-70%, and that can be including interest as well. There's lots of different ways that lenders structure interest, and that could get a little bit more complicated. But you'd expect an interest slice to be in there, and then the rest being covering the full bill costs. We quite often get asked to do deals where we're not funding 100% of the bill costs, and that from a lender is not really viable, just because we could have a project where, let's say, we get to watertight when just before the fittings, the first and second fix finishes come in, and they're in a position where say the scheme's run out of funding, or there wasn't a sufficient contingency in there to allow the project to get to completion, and then you've got a lender that's completely a facility that's not been completely used or has been completely used at that point, and then the whole project grinds to a halt. So that really comes down to the skill of the lender from day one to be able to
navigate
and foresee problems like that occurring.
And you work with professionals, don't you, as well? You kind of have kind of valuers as far as it will come out and look at kind of certain stages of that development, because my understanding is with development finance, they won't just give you all the money up front and go, there you go, lads, crack on with it. Because they might go buy a new car or something similar like that. So it's normally done in stage payments, isn't it?
Yeah, so we've got 6 stages, if you like, for each deal. So the first stage would be for the DPC, the damp proof course, to be fitted. Then the second would be for the wall plates to be in.
Top of the walls,
Yeah, exactly that. And then the third would be for the roof to be fitted, the roof to come on. The fourth would be for the first fittings. And the fifth is the second fittings, and the sixth would be for completion of the project.
Okay.
And we would have a surveyor come out on each one of those stages. I think we can offer to the funds to come out within 24 hours because we're not a bank, of course. So
perfect.
I think that's the difference of us as well, and the fact that when you do go to a bank, you get chucked from one place to the other, whereas when you go to a development finance company like us, for instance, you're going to be speaking to decision makers, and it's much easier to get those funds.
With the other things where you need them fairly quickly, we've done some
Exactly.
developing ourselves as well. We know that when we're starting to run out of money and we've got to those stages, we need the next bit pretty quickish because, we've run out of money basically. So that's the reason why we need to come back for our next bit. So if you'd be able to kind of put it out relatively quickly, I think it's pretty key.
Yeah, exactly. And I think that's one of the benefits for us as well. I mean, Ashley, you're probably better speaking about this one, but there's been situations where we've went out to site ourselves, taken photos, sent them back to the office, and managed to release funds within the same day.
Okay.
So it's always about keeping the project going, never stopping it, because it's not benefiting anyone when the project stops.
Well, the real profit for everyone and to make sure you guys get paid back is when the property's sold, yeah? So
Exactly.
To get to that end point and to have kind of someone flexible alongside you that can help you do that, especially in today's market, which have had costs. I mean, we've heard of when we spoke to our network, which does our development finance, they reckon that costs over the last 6 months have risen some in the region of around about 25-30%. So that's a big.
It is, yeah. It is putting a lot of strain on profit margins because the cost of land isn't dropping, so there's no saving to be had there. And I think we're seeing margins being squeezed, but I think the cost of supplies is only going to level out. It's not necessarily going to come back down.
Yeah.
So I think that's why developers are going to have to be a little bit smarter going forward about the way they buy properties, because that's where the profit is going to be mainly.
Yeah. Okay, so just to kind of go, so potentially, if say for example client may already own the land, potentially to help them do kind of 100% worth of their building costs. If say for example you had to part own the land, then you'd want to kind of part own the land with the client. They have to put some money in, and also then they'd have to part pay for the build as well. Yeah, have some money left over for that. So you're both kind of jointly liable as such.
Exactly. Yeah. So the point is that we know that we could get that thing, the development finished at that point, and it's not just going to be a distressed asset or we're going to have a problem.
Yeah.
And the thing about development is there's no development is the same. So whenever you see problems arise, we can always see things for the first time. Like I'll give you an example. We had a client recently where they're buying a plot of land in Leicestershire, and the lawyers have started looking at it, and it turns out one of the original owners of the site is actually buried on the site.
Oh my gosh!
That was that was very much a first for me in my 10 years of doing this, was having a dead body potentially on the site. But it turns out on further inspection that it was actually buried just outside of the curtilage of the development. Okay. But it was just another curveball that you haven't seen before, and it was another interesting one to deal with.
But we have seen developers sometimes come across that, sometimes where they've come across bones, I don't know if they're human and that sort of stuff, or gold-crested newts, or God knows what it is. So what other kind of scenarios have you come up against whereby you've been surprised when kind of going along?
Well, this is the thing, is obviously a lot of the time if there's particular areas that are being developed in, so the council, as part of the planning conditions, may insist on an archaeological dig. We have had clients find various bits of Roman pots and pans and what have you, and they get very excited, but it's not really necessarily a good thing from our point of view, because it means
slow down development.
It means that your site's going to come to a halt. So it's things like these are just I think this is the difference again between, say, a bank style funding and a specialist development lender, where a bank will look at that and just think, okay, that's a problem for us, we want our money back or what have you. Whereas for us, it's it's a hurdle, but we're here to work with the client. It's not us versus them, and that sort of attitude. So as you said, there's the weird and wonderful ecological problems with bats, hedgehogs.
Hedgehogs is kind of
we have hedgehogs on site. You have to build boxes so they can go and visit their other hedgehog friends and what have you.
Probably for a cup of tea.
Yeah, exactly. Yeah. So you've got to build those, and it's just it's the nature of it. But I've got clients that have been doing this for 30, 40 years, and even they turn around to me and say, Ashley, I'm still seeing things that I've not seen before, and we're always learning, and that's half the fun of it.
But the other things, I suppose, as time goes on, there's more people are concentrating more on kind of ecological type problems and issues which maybe they wouldn't have had 20 years ago. Maybe nesting bats 20 years, they just would have kind of got chewed away, and that wasn't ever thought about. So there must be kind of lots more things now than what there were years ago, I would imagine.
Absolutely, and it's it's the on the part of the council to deliver this, in line with government legislation. So they have their role to play. I think there's what we haven't achieved yet in this country is a happy medium where councils are able to probably be a little bit more pragmatic in letting people build and develop without tying people up in knots. And being a bit overkill in terms of some of the reports and surveys, etc., required that you need before you actually start, say, a new build project. So that's where we come in. Is we do a lot of hand holding during that process. Our team have been doing this a long time, so they'll look at pre-commencement planning conditions, and they'll help our clients get them signed off. And whether it's having a sewer repointed or what have you, it's all stuff that a lot of the time that we know what to do and how to deal with it.
Well, that issue of planning kind of does come quite a lot. We get quite a lot of clients asking us, "Oh, can I buy land? It doesn't have planning yet, but I'm sure I can get 417 houses on it." But potentially, we have clients come that have seen land cheap because it has no planning. And I assume you guys would want to have some sort of planning on it, because without planning, it doesn't really have any value, does it?
We do need planning permission for any project that we go for, but we can look at certain aspects from, say, for instance, your client did buy the plot without planning permission, so that's going to have a certain site value without the planning on it. But say they do get planning permission granted for 2 semi-detached 3 beds, we can then look at the planning. We can then look at the value
once it's got planning.
Once it's got planning.
Okay.
So we do get situations like that come up where somebody says it's going through planning at the moment, it should be worth this. We can give them some kind of some primitive terms on what we could do on the site if it's granted.
Okay.
But it needs to be granted for us
some sort of plan permission
to jump on it. Yeah.
Okay, because without that, as I say, we do get a lot of clients thinking the plan permission's relatively easy, and I know from personal experience, it's a complete.
It's a minefield.
It's complete, somewhat of a nightmare. To try and kind of get through those kind of terms and conditions, and where you thought would be, you've seen other places being built here and there, doesn't necessarily mean that you better get planning for yours. Also, if you've had planning previously on a bit of land and that's expired, again, there's no kind of surefire way of knowing whether that's going to get re-granted again or not. So I understand that land without planning is somewhat of a minefield.
It is, yeah. It can be tricky for us as a lender, because then you've got, say, a plot of land. If it doesn't get planning, what's the value of it? And then we potentially let money against that. So yeah, we are.
There's no real exit strategy because it hasn't gone up in money.
Exactly.
The interest probably rolling up and that sort of stuff. So potentially,
exactly.
You've got to have planning permission.
Yes, absolutely. And I think some of our more successful clients are able to work the system a bit more, and they'll come to us with, say, an option agreement. They'll say, I've seen Mrs. Smith next door, she's got a very large garden, and they'll go to them. They'll agree a value on the basis that they can get planning. And there are deals like that work really well because it's a win-win. Someone has got fair value for their plot of land that they wouldn't have otherwise done anything. And the other side of it is we aren't building enough houses in this country, and there's a serious housing shortfall. It seems to be kind of pushed to one side at the moment because we get a new housing minister every 5 minutes. But I mean,
standard.
Yeah, absolutely, and it's going to continue to be a problem because of the planning system. And unfortunately, I don't see that changing anytime soon.
No, it seems to be. If anything, I know that a couple of years ago we had these great big town plans that were supposed to be involved, where towns were supposed to say how much they were going to build by what point and what sort of properties they were going to build. Some of those still haven't got those. For example, where we are filming at the moment, we're in Benfleet, so Castle Point still hasn't actually yet got an actual master plan, which is absolutely crazy. So I think there is definitely a huge need for kind of more housing. We're seeing, the only thing I would say with houses is the fact that what we find is that people love the idea of new houses being built. They just don't want them built near them.
Absolutely.
So the problem that we have is the fact that we have tons of people going, my children can't buy houses, don't know where they're going to buy, don't know where they're going to live. We need more houses. Then all of a sudden there's a new build development comes along and they go, oh yeah, we don't want it there because there's too much pressure on schools.
They're out with their pitchforks.
The traffic's going to be horrendous in the morning. That a lot.
That can sometimes be a little bit difficult, I think, when we're kind of going through. So let me just try back just to what the other stuff you guys do as well. You said you do potentially properties already there so people can kind of, buy them, do them up and flip them, that sort of stuff. So just tell us a little bit more about how one of those deals could be structured, for example.
So, I think the thing with conversion and refurbishment projects is they're a lot harder. Well, in some respects, they're a lot harder to price from day one because I think when you have a hole in the ground and you're doing a new build development of say 2 houses, you can have any good builder or main contractor that should be able to price that very easily. And provided we don't have any continued crazy increase in building costs, you know exactly what that's going to be even in 12, 15 months time. Whereas, let's say if you go into a very old building, say you're converting a church into flats, as we did one recently like that in South Wales, where it was a great project, but they start ripping out, this really old church, and all of a sudden there's loads of surprises hidden, and then the costs go up. So it's, in some respects, they do carry some more risk, although you'll find if you're looking for a lender to lend on those sort of projects, you probably, in the world of more traditional bridging, where the bulk of the loan is going to be in the day one purchase rather than the build costs. So if you're going into, the example that we used of a homes under the hammer style flip, where you've got just a slightly dilapidated house and you're going to gut it and stick a new kitchen and bathroom in, and you know what that's going to cost you. Yeah, what it's going to cost you, and you'll find a lot of mainstream lenders or secondary lenders are going to have a bigger appetite for that, just because it's easy. Anyone with a bit of money behind them could fund that, and therefore it should be easier to borrow funds on those sorts of projects. Because in some areas you could buy some of these houses for, say, 60, 70, 80,000. And your cost of work is going to be minimal. I think a lot of people use that as a good entry point into the property development world, just because it's not as capital intensive as, say, doing a large building project of, say, 6-7 houses.
So, say for example, if we did take an example, say a house, say for example, a bungalow that needed a bit of work doing to it, how would you guys kind of help a client in terms of percentages and that sort of stuff, just so we can get a rough idea as to what's kind of viable at least? Yeah,
absolutely.
What do you expect from the client as well?
We would lend 60% on day one to help them purchase it, and then we'd lend 100% of build costs.
Okay.
We would typically require some relevant experience, or at least if the client can demonstrate that they've got a good income stream with decent asset and liability position. So as long as they're ticking some of these boxes to show, they're not, on their last dime and they're, spending our funds elsewhere, that sort of thing. But I think, again, this is the difference between a bank and a specialist lender, is because we're making human-based decisions. So, for example, we meet every single person that we lend to. We sit around a table, we kind of talk about, the deal, we talk about football, what have you, and we get to know them a bit better. And that's where, myself as a business owner, you kind of get a flavor of who to lend money to and who to not after a while of doing this. And you do that by making a few mistakes along the way. But, we have a solid lending business with a great loan book these days, just because I think we've got it down to an art of meeting people, looking at the requirements that they have. Getting to those levels of the day one amount that we could help to unlock a project and keeping it moving.
Okay, that's absolutely fantastic. Cool. So, of all the projects you've dealt with, what to date do you think has been your favourite project that you've worked with?
Ooh, that's a good one.
To give me anything about it. We've written down a load of questions. That wasn't one of them. So sorry to blindside
you. I'm interested in this as well, actually.
I'll tell you one we did that was really cool. We did one on an island in the middle of the Thames by Henley, and so
is that one? That's the fort. There was one there that was a fort that was done. Is it not that one?
It wasn't that one. No. It was basically a small island where it had 7 or 8 houses on it, and obviously the postman's going across on a boat, that sort of thing.
Sounds amazing.
It's super quirky, a little bit interesting when you're trying to get flood risk insurance on that sort of thing.
Materials there as well must be a bit of an overhead.
Exactly, yeah. So firstly, you're building a house on stilts to allow for obviously the Thames you're going up and down, and getting building supplies across, which is basically a pulley system with a boat. And then
that's amazing.
Exactly, and then during a strong tide, I think our builder saw the supplies floating downstream quite a few times, and he had to go and retrieve them. But no, that was a very quirky one, which again, I think the client, from memory, he approached a bank with that, and he was probably laughed out the room at the time. But we were able to provide the right structure in place, and it was just it was good fun going to visit him as well.
Oh, it's good going across in the boat.
Going across in the boat, yeah, a little bit wobbly, but it was all right.
That sounds amazing. And what other kind of have you done any other kind of projects of maybe slightly bigger scale that you've absolutely fallen in love with? What have you? Yeah,
so we're doing a few larger ones at the moment, say 11 or 12 houses. I think the main difference is, so for example, we have one close to here where the client's going to build 9 houses, and it's next to a development by a major house builder. And the difference is he's going to end up competing in those sales, but whereas the major house builder doesn't have the same attention to detail as our borrower, as our builder developer, because they're not looking at the detail. They're looking at the larger scale, and they're looking to get in and out. Whereas flipping that around, the difference where the big guys and the big house builders are really adding value, and where they're very good at is they have a proper sales team. They're able to sell their product at the end of the day, whereas our clients probably don't have that same level of expertise and that same nous when it comes to how to present a project when it's a finished unit, when it's on the market, and how to move it on, and obviously pay back the debt you've got on there and move on to your next project. So we have a large project of 8 houses or executive houses we're doing in the middle or a decent area in Leicester at the moment, and they were all pre-sold.
That makes you guys feel much more comfortable, I'd imagine.
Absolutely. So that dream scenario for a lender, all pre-sold, large deposits taken on them as well. So we know that all the buyers are serious. And it makes funding those sorts of things a breeze. But for that sort of project, when we look at it, we get a quantity surveyor in to monitor it on our behalf. We'd be releasing the stage payments in more regular tranches based on increased value of the site. And the whole point of our role in that scenario is to provide a cash flow for the client.
Yeah, absolutely fantastic, brilliant. Are there any kind of projects that you've seen that have started and kind of maybe not gone quite the way they should have done for one reason or another? And what was kind of the...
There was one when I first joined that we went to, and it was on one of the steepest hills I think I've ever seen in my life.
Oh, really?
And the ground works, I think, took 5-6 months to get going.
Yeah.
I mean, probably unestimated as well. You probably hadn't. I mean, you can guess that stuff, but build control sometimes.
Exactly that. And I think it took about maybe 10 months to actually start building up.
Yeah.
I think it's completed now, I think, is it?
Yeah, so they're getting to the point where they can put it on the market now. But yeah, look, we got to a point where we were 7 or 8 months into a 50-month loan, and as Aidan said, they're barely out of the ground. So it was a matter of sitting around the table and saying, okay, guys, we now need to rework the facility for you. Your costs have gone up. You've not gone very far. But, I think you're sticking with the client in that instance is the key to it, rather than, trying to wash your hands of it. I think the main thing is to try and, unlock the value there, to work with the client where we can. Yeah. So, we unfortunately don't get it right the whole time. And when you have a project that runs into difficulty that arises, I think it's all about the experience that you have as a lender to try and help your client move forward.
Yeah, and in the day you want the same outcome, don't you? Which is to
absolutely
get the place sold. Your client have earned some money, you guys earn a bit of money and get your loan paid back. And
I think it was the fact that we actually went out and saw them as well.
Yeah.
So it kind of put our heads it made us a little bit calmer about the whole situation.
Yeah.
Because we actually saw what was going on. We saw that there was workers on site. It hadn't gone to a standstill. They were still trying to get through the problem, but it was just a case of time.
Yeah.
And we gave them that reassurance on the day.
Yeah.
And that we're still there, still working with them. We just asked for a little bit more communication. Yeah. Because that's what it is at the end of the day. It's all about communication with our clients as well. And again, that's how you build the rapport as well. So it's really about getting out there, and once these problems do arise, getting to the solution as quickly as possible and making sure that they're feeling as though we're working with them and not against them.
My understanding as well is that most of the problems which a developer incurs generally will be trying to get out of the ground. I think once you're out of the ground, you kind of pretty much at least you can plan for those other bits and pieces. But when you're trying to work out how deep you've got to go, what you've got to go, and that sort of stuff, my understanding is that's probably the riskiest time. Does that sound about right?
Yeah, I think once, as you said, once you're out of the ground, then it's a matter of making sure you stick to your costs. I mean, you could go crazy and putting in the high spec kitchen or what have you, or really quite out there features. But I think ultimately what we like to see is people building the right product for the right market. Yeah. If you're building starter homes, you don't need to go crazy on the finishing.
Gold-plated taps and...
Yeah, exactly, yeah. And then, or in the instance that we mentioned where, let's say they're pre-sold, the problem you've got is then you've got 7 or 8 different families all trying to, bespoke their kitchen and ordering this, that, and the other. We had an instance recently with a client where he pre-sold it, but he hadn't taken much of a deposit. Mm-hmm. The clients have ended up putting, I don't know how to describe it, it's kind of white ceramic kind of tiles, like bathroom style tiles, but all around the bedroom. Okay, so you've kind of got this bedroom.
What they were going to use it for? I mean, I don't know.
I don't want to ask any questions about that, but you've got this kind of bedroom that looked probably more appropriate for Miami Beach. Yeah, absolutely. Somewhere far more exotic than Derbyshire, and surprise, they pulled out of the deal. So then you've got a developer's got a house with a very quirky and difficult to sell master bedroom. Yeah. So that's part of the fun with dealing with potential purchasers and especially the higher end stuff people want. Yeah.
Bespoke, don't they?
Yeah, exactly. They want to put their touch on the finishes and they want it how they like it. So it's just another hurdle for our clients to overcome.
Oh, brilliant! Absolutely fantastic. So we've touched on development finance. Just always the difference between kind of bridging and development finance. If you can be, so development finance I know is more long term. Bridging just helps you buy the asset now, doesn't it? We're just talking a bit more about the different types and how development finance is different to bridging.
Yeah, absolutely. So a bridge is, it can be used for a wide range of reasons. It's still, a short-term lend typically against a property asset. However, it's, could be used for, say, an auction purchase or a refurb or a chain break scenario where it's got to be very quick and it may be 3, 6, 12 months or what have you. Whereas development finance is, I say explicitly, you being used for property development, i.e. new build or say a larger scale refurbishment project where you've got, 2 levers essentially, the day one amount, which is, inverted commas the bridge, and then secondary to that, the build loan, the actual, the funds going in towards the actual the cost of the project.
Yeah. So say, for example, with a bridge, you might better, use the bridge to kind of buy that particular property. Whereas, for £100,000, for example, they might lend you, 70% of that. But really, you still need money to kind of actually, even though you'll get that money on kind of day one, I doubt very much a bridge is going to lend you the money not only to buy land, but also to build it all as well, because they're giving it all to you now. Whereas with you guys, at least with a development loan, you can see that you build a bit, the value goes up, so you lend a bit more.
Yeah.
Build a bit, the value goes up, you lend a bit more. So
exactly, yeah. So what you might find though is that banks or different financial institutions all have different interpretations of what bridging and development is. So you could go to say some challenger banks where they'll have different departments for light refurbishment, heavy refurbishment, medium refurbishment, and that's just kind of made up terminology, if you ask me. The point is, if you're adding value by way of of some sort of works to a project, that's development, and therefore requires some form of development finance. What we've seen recently, because the bridging world is so saturated with money, we're at a point where there's a lot of liquidity, a lot of money sloshing around. We're seeing more and more lenders spill over that into development, thinking it's just a natural extension of, say, bridging, where actually it's not. It's a completely different style of lending. It requires a completely different set of expertise, different, knowledge banks that a traditional bridging lender may not have. But we've seen a lot of examples of bridging lenders coming unstuck because they've gone into, say, a development deal thinking, well, there's loads of profit in it, so it's a good deal, we're safe. The borrower's got a lot of money behind them, and it's just not worked out because they've not been able to solve those problems in the same way that a more experienced development lender has. Yeah.
Okay, absolutely fantastic. So when you say so just give me an example, what is it a lender looks for in the developers? Do you have to have tons of experience? Do you have to have tons of money behind you? Give me a bit of an idea as to.
I would say relevant experience is what we look for. We get quite a lot of clients that maybe are doing their first development but have been contractors for 30, 40 years of their life. We do have the occasional projects where somebody's bought a plot at auction, planning permission on it, doesn't really know what he's doing, but he's managed to get a good contractor on board as a joint venture.
Okay.
And they've teamed up together to finish the project, so we would look at that as well.
Okay.
But again, that's on a case-by-case basis is the caveat that I put in there. But yeah, I'd say it really does depend on anything else.
And in terms of like income and that sort of stuff, you wouldn't expect to have a minimum income, and in fact that maybe a client can support themselves.
So they've got to have some cash available. I think they're coming into a deal with no liquidity. That's no good to a lender, and so we like to look for good asset and liability position. As Aidan mentioned, experience is down to interpretation. So let's say if they're, an estate agent that's done a couple of refurbs, maybe we'll do, a conversion project with them, but we won't fund them for, say, 12 new build houses. It's got to be that natural progression.
You step up sort of thing rather than jumping from A to point all the way up to point Z in building. Exactly.
It's got to make sense, the progression. We're here to help people grow their businesses and take those steps forward, but they've got to be, baby steps.
Progressive,
Exactly. And that's the only way that it works from our point of view. A good position. I think we got to look at the property they're building. Is it the right property for the right area, or are they trying to set a new precedent with pricing in the area and something that's going to take 12 months to sell? So we've got to look specifically at the project. Ultimately, from our point of view as a lender, the underwriting process is a marriage between the client. Are they competent? Are they able to deliver? And then the strength of the project. Is it a good project, or is there good profit in there? Do the margins make sense? So I would say those are the key points.
Okay, absolutely fantastic, awesome. So we also get quite a lot of like first time people who have started doing a bit of research onto on places like the internet and so on, and they started to kind of get a bit of an idea as to how property development works. And we were really surprised. We did a little bit in my wife's primary school teacher. So we went to a primary school and we asked people during their open day. We had like a little stall there. And we asked children, so what do you be when you get older, and what sort of house do you think you'll live in, that sort of stuff. And we were really, really surprised that probably out of 30 children that we interviewed, probably 4 of them said I want to be a property developer, which for us was just, we were like, what? most we'd expect most kids to say play football, whatever else it is. So I think property development has got a lot more popular over the last, say, for example, 10 or 20 years, and obviously clients just start doing their research and that sort of stuff. From our point of view, we firmly believe that there's so much good free information on the internet, but we do happen to come across quite a lot of the time kind of property seminars and mentorships. Have you had many kind of clients approach you with those sorts of backgrounds? And
yeah, absolutely. Well, firstly, we call that the kids wanting to get into property development. We call that the Sarah Beanie effect. It's just, I suppose it's too much TV more than anything. But no, absolutely. I think this is a bit of something I've been quite vocal about on social media. Is there's we've seen a large amount of these property, say, inverted commas, masterclass seminars pop up. Yeah, absolutely. Where it's a 3-day course, it's going to cost you a fortune. And ultimately, the people delivering these courses are, purporting to be really successful property developers, but ultimately, they wouldn't be spending their time, delivering all their, all their knowledge to potentially new competition in whatever area they're developing in. I think a lot of the time they're very sophisticated, good speakers that, deliver, good messaging with, say NLP, neuro-linguistic programming techniques. But I think ultimately are people really getting value for what, they're paying for? As you mentioned, there's everything you need is on the internet. All the resources are there. All the video content is there. Anything you want in terms of case studies, it's all online. So I don't understand why someone would start, forking out the hard-earned cash to attend these seminars and masterclasses where, they'll come away feeling warm and cuddly afterwards. I'm sure it'll be delivered in a good way. You have a couple of textbooks as well. But I think it's totally the wrong way of going about it. And, as human beings, we learn things by doing, and so I think sitting there at a seminar is absolutely the wrong way of going about it. But it's an unregulated space and there's plenty of people doing well as a result.
For me personally, I've seen 2 different aspects of it. So first of all, we've got friends of ours which were helped out in terms of buying HMOs potentially up north. They won the course there, but they've actually done all right of it, to be honest with you. They've actually done well. So they won the course. I don't know how much it was, but it's quite a chunk of money. Both of them went on and learned all about it. They've now up north got around about 3 or 4 HMOs, which are working really, really well. The only downside is that they did it in an area which takes a long time to travel up to. It's about 4 or 5 hours away. So they're finding sometimes a lot of time is taken up going forwards and backwards and forwards, backwards and forwards and backwards. But for them, those are probably, I think, one very small part where it's been very, very successful for them. They had backing, beforehand and that sort of stuff, and just wanted to learn a bit more about it in a specific way. And I think that's kind of probably, not such a terrible candidate.
Agreed.
What we don't necessarily have that much faith in is, for example, people that, maybe they are just starting off, maybe they are, we've heard those sorts of seminars say to people, you don't need to go to university, don't spend £9,000 a year in university, put £12,000, or £11,997 on a course, pop that on a credit card, you'll pay off next to no time at all. That's really where I think the industry needs a proper big shaker, because that for me is scary, that you'd be encouraging people to put a large sum of money on a credit card with no potential way of paying it back, or saying that potentially that's a much better education than, say, for example, a specialised university degree potentially.
Yeah, absolutely. I think that the problem with it is it oversimplifies something that people spend decades doing and learning from.
Still get surprised.
There's still dead bodies buried in sites. So
nothing to do with you guys, though. It's not like
there are absolute benefits from it, I'm sure. But my point being is that you could, without spending, say, the £12,000 to attend a seminar or a week-long mentorship program, however long. There are better ways of using that because the resources are elsewhere. So, the example of your friends who are doing HMOs, I would say that they probably could have done that have been empowered by some of the tools that are available online with just a bit more time and research spent on there, because there really is some quality information on there, and you don't have to buy loads of textbooks to go along with it.
Yeah, no, I 100% agree. No, so I was going to say we're firm believers that we do. We're firm believers that we do sometimes speak to people that have literally just starting out. They've maybe been motivated by similar companies. Go, right, I want to buy a house. What do I need? And we're like, okay, so you need a bit of deposit. You also need some purchase costs as well. Well, I haven't got that. Maybe I can. And it is sometimes, you will need to risk a little bit in order to, your own money, your own standing, before other people potentially will want to invest in you as well.
Absolutely.
Once you've got a bit of experience, not necessarily just time. Absolutely.
Look, even the Candy brothers started out by borrowing money from a relative and doing a small refurb project. So we all have to start small, and I think that's the best way of going about it.
Yeah, absolutely fantastic. Cool. All right. So moving on. So what are kind of the main common mistakes that you see developers making?
So the two key ones are, firstly, overpaying for a site, getting carried away, maybe getting a bit, trigger happy at auction.
So when it starts bidding up, it starts going up.
It starts,
you miss out when you've got maximum.
Your heart's racing, and you want that site. And I think you've got to set a limit. You've got to set a level that you could go to on that, because ultimately that's coming off your margin, that's coming off your bottom line. And then secondary to that is having people not quite pricing the actual build cost properly. So that's thinking they can always do things cheaper, which cheap usually turns out to be more expensive in the long run, and that's with most things.
Yeah.
So if they're not putting a project out to tender properly, or they're getting just their mate to price it up on the back of a fag packet. It's just either way. I think those are the two common ones. I think making sure you got your build costs spot on is key, and making sure you're buying your land or your property at the right price.
Okay. Fantastic. So overpaying at somewhere suitable. So have you kind of had situations whereby someone has actually been and bought property, or you looked at it and you've gone, I'm not sure about that?
Yeah, absolutely. And we've had really frank discussions with some of our clients where I've turned around to them and said, look, we can't do this because either your build's way off. Yeah. And I'm not a builder, and I can tell your build's way off. Or alternatively, you've overpaid for this site, pull out the deal, or go back and renegotiate, which does happen quite a bit, especially now as some of the froth is coming off the market. Look, it's our responsibility as a lender to make sure we're getting into a project that we know is not going to have problems in, say, 8-10 months' time. And it's a hard conversation to have. Yeah. From our point of view, we make money as a business by getting money out the door. So we'll happily lend you the money, but there's no point of doing that if it's just not going to work. Absolutely. We have a saying in our sector that says, anyone knows how to lend money, but the skill is making sure you can get it back. And that is what we do.
Exactly.
Yeah.
Okay, fantastic. And the main other issue you said is potentially building costs and that sort of stuff as well.
Yeah, building costs, not pricing things properly. And I think, the clients that I've seen struggle the most are the ones that, have had big ambitions to be the next, Bloor Homes or what have you. And they've not taken those baby steps that we spoke about, where the stuff that's not, perhaps as glamorous as, going and build, 40 houses in a new housing development, but it's going to help you get there. Yeah. Rather than trying to jump to the big project straight away.
Okay.
I think as well as that, correct me if I'm wrong, of course, but it's picking the right contractor for you as well. And actually, that's a mistake that I've found since I've joined the company, is you'll get a lot of clients coming to us with these fantastic projects, but not with the relevant experience, but thinking that they're teaming up with the right contractor. You'll get into the legal stage and you start to find out a lot more about the contractor than what the client knew. And a lot of problems start to arise from that point of view. We sometimes can lose confidence in that contractor with the information that we find out as well. So I think it's about really researching who you're going to work with more than anything else, especially if you're still about to start your first project, because you want to make sure everything is absolutely spot on. You want to make sure that your contractor has a proven track record. Yeah. Even speaking to some of the people that the contractor's worked with before, getting some of those references. Yeah. Checking companies' house, little things like that, making sure that they've not had
7 companies liquidating the last couple of years. Start them and end them again. And stuff does happen with builders, especially previously as well.
Yeah, of course. With COVID as well, we've had a couple of situations where there has been liquidations from contractors, and you think, well, that's happened everywhere. So
you see the reasons why. There's an explanation behind it.
Yeah, exactly. And so we can work with that because that's not as big an issue. But I think the issue is when you do have 7, 8 examples of them not being able to manage the money, because we don't want to lend money to somebody that's not going to be able to manage it at the end of the day. So I'd say as well as that, that's one of the real key points. I think that's a mistake that a lot of new developers, new clients do unfortunately make the mistake of picking the wrong person to work with and making sure you get on with them first of all as well, because
you must see a lot of breakdowns potentially sometimes between
you do
contractor and client.
Yeah, you do, and it's something that you really need to make sure that you're comfortable with. Is that person, make sure that you 100% trust them, because if there's any doubt in your mind, then that's going to come up at some point. If something does come up in cost, you'll be thinking, why is that going up in cost? Is he doing me over here? Is he trying to pull the wool over my eyes? What's his angle here? And then it's just going to cause friction and eventually break the relationship, which then we have to pick up the pieces for. So that's one of the other things that I would say to watch out for is the contractor, the people you're working with.
Maintain good communication with them also. So that's sometimes when it breaks down is when both parties must think they're right, and that must happen quite a lot. Both parties think they're right, and then for one reason or they haven't explained each other's situation right away, in the right way. So,
and you get that with, I think that's across the industry as well. I mean, even after development finance, when you're looking to sell on, if your estate agent isn't communicating with you properly, you're going to get really really frustrated, and I think it's something that everyone should be doing is communicating properly. And so it's not, I think it's from every aspect, from the client communicating with us properly, giving us updates, maybe like once a month, something like that, just sending us a few photos saying we're at this stage now, we're still on track, might need some sort of funds in the next few weeks, because then that gives us the heads up that, right, okay, we're going to need to make sure that we can give that to him straight away as soon as he needs it. So I think communication's another massive factor.
Key point.
Yeah.
And then moving forward then, so when it comes to actually kind of just selling and marketing the properties, is there any kind of tips you would give kind of developers in the best way, or the best people to choose for kind of marketing their proproperties or get them sold at the end of the day for the most amount of money?
Yeah, I think one of the main things that we like to look for is don't market it too early. I mean, unless you've got something that's really hot and you're certain you're going to have people falling over themselves. Let it build up. Don't start doing viewings when you've not got.
You've got to step over.
Exactly. Because I think ultimately part of the purchases they're buying their home and they don't have that vision where they can think about what it's going to look like, or can they see themselves living there, because no one sees themselves living in a building site. So sometimes I've had to have a conversation with clients saying take that off the market. What are you doing?
You want to get the maximum price. I mean, it is a developer going to get the maximum price possible. Maximum price possible when it's finished and it looks stunning. We'll go, wow, that's amazing. I think I could live here. It's going to be incredible.
Exactly, and that's the name of the game, really. I mean, there are exceptions where where you're building something in a super area, or there's super high demand, or you have good links to agents where they're certain that you might get pre-sales, for example, in which case you can make some CGIs and you get some mock-ups of those sorts of things. But invariably, I'd say we try to make sure that the marketing is held off a little bit, and try and be a bit sophisticated with your marketing strategy. Try and use multiple agents, or are you creating a website specifically for your development, or have you got CGIs or video tours, that sort of thing. So in today's modern age, there's no reason why your development shouldn't be on social media, and then coming from all angles.
Okay, excellent. Thank you very much. So coming on to kind of uncertainty and make sure the stuff's on the right place. And I know we haven't kind of prepped you for that. It's not one of our questions, but so let us go. What do you think is going to happen? Property price?
Well, you know what?
No one knows.
Honestly.
You said.
How long's a piece of string, I guess, isn't it?
I'm going to try and give you a politician's answer and not commit to anything. But look, I think the bottom line is that no one knows. So all we can do as lenders is try to be cautious. It's very possible at the moment that we could be staring at a period of a correction. I don't think anyone will be surprised if there was, say, a 10 to 15% correction of sorts. I'm not saying that's definitely going to happen, because ultimately we're all subject to micro markets around the country. It's not just the property market. But I think that's very possible, but I can't see it lasting any particular long period of time. And I think, for us as a short-term lender where we look 12, 15 months in the future, I think, property prices are still going to be, fairly stable. I think, there's still the inherent demand that was not building enough houses in this country. There's going to be an issue over affordability that's always going to be there. But, I think as long as there's, demand outstrips supply, then, the pricing will always be there.
This thing, we have found that previously. I know at the moment there are more market conditions. We've had, say, for example, when they brought in the second phase of stamp duty, and that was going to kind of cause the market. I think it's anything that sells headlines. So that was going to cause the market to drop by 10, 15%. Maybe when they brought in Brexit, that was going to cause prices to drop by 10, 15%. Then there was, what was the other one that was going to make it drop the same way?
Trump, Johnson,
all of that stuff.
Aliens,
exactly.
So,
we have had similar headlines which have been kind of posted before. And yes, they may have leveled out for a period of time, but ultimately, they didn't drop. Maybe we might see something different potentially with mortgage rates. But
we're in a really, really strong sector. The UK property market is historically always been strong, and it has had dips before, but it always recovers quickly. And I think there's, as long as the media doesn't spend too long talking us down, and the supply of credit, which they will, but as long as the supply of credit in there, mortgage lenders are lending as they should. Then I think we should see continued level of at least some level of stability moving forward.
Fantastic. Excellent. Thank you very much. As a more of an answer than what I was expecting. It was kind of a very politician answer, but that's very good. Thank you very much indeed.
My pleasure.
So we're moving towards the end of our podcast. So guys, thank you very much for kind of joining us. Just on the last note, kind of give us a little picture of Magna Capital and the way you do stuff, where you're different from everyone else, and why people should use you, basically.
Yeah, absolutely. So we are very unique in our market, that we're one of few lenders that focuses only on development finance. So mainly new build, conversion projects. We're about building long-term relationships with our clients, doing things face-to-face. We allow all of our clients to have direct access to the decision makers in their business. There's no credit committees. You don't ring up and you're ask for your mother's maiden name. Exactly. It's everyone in the team knows who you are and what your project is, and it's hi, how are you? And it's slightly old-fashioned in a good sense.
In a good way,
we're doing what banks used to do 20, 30 years ago, where we sit down, have a cup of tea or a beer or whatever you prefer, and talk about your project. Always. Talk about your business and help your business grow.
Fantastic. Guys, well, thank you very much for going to join us today. Unfortunately, that's all we've got time for. We really hope you've enjoyed the episode and found it useful. Please don't forget to follow, leave a rating, and hit that bell button to be notified of future episodes. Thank you very much, guys.
Thank you.
Thank you very much.
Cheers. Thanks.